Hey everyone, welcome to our channel Financial Freedom once again. We believe that those that are following us by now are making a lot both online and offline without stress in their various fields, even in their comfort zone. Today we will be discussing with you on how to grow your fortune with index funds. Don't forget to follow, like and subscribe to this channel, and also hit the bell button so that you can be notified when we release a new video. Thanks. What are index funds? Index funds, also known as mutual funds, are a specific type of mutual fund. Here's a quick explanation of a mutual fund in case you're unfamiliar with them. Index fund, mutual fund, a pool of money that's collected from several or many different investors. Professional financial managers handle the money and allocate it to a variety of different investments to try and create capital. Investors don't directly own any of the stock that's purchased by the mutual fund. However, each investor gets an equal share of the fund's profits. Likewise, each investor would take an equal loss. An index fund is a mutual fund that's not actively managed by a financial manager. The index fund holds stocks that are representative of the entire index. Here are the benefits of investing in an index fund. Low cost, less risk, simple. The most beneficial aspect of index funds is that they're low cost. Index funds almost always outperform standard mutual funds over a long period, mostly because index funds are not handled by financial managers. That means there are no costly maintenance fees that detract from your profits. Index funds also come with substantial tax benefits. With an index fund, less buying and selling is going on than if you were buying individual stocks. You'll have far less capital gains tax to pay. How to invest in index funds. Here are the steps involved in investing in index funds. 1. Decide where to buy. First, you need to decide where you want to buy your index fund. You can buy directly from a mutual fund company or a brokerage. Later on, we'll suggest a few good places to look. Here are some of the things you should consider when choosing a provider. Selection. Every provider will offer a different variety of funds. The larger mutual fund companies often sell their index funds plus their competitors' index funds. However, a broker might offer funds that have a greater variety of included stocks. Shop around and find the provider that has what you're looking for. Ease of use. If you're only looking to buy index funds, you might be better off purchasing from a mutual fund company. But if you're looking to invest in index funds and other types of securities, like stocks and bonds, you might prefer a broker. A broker can handle all different types of investments for you, and there will be less paperwork come tax season. Trading costs. Some providers waive transaction fees, but others don't. Mutual fund companies tend to charge a commission that's about $20 or more. Consider your budget and the overall profitability of the index fund. 2. Select an index. Decide which index you'd like to invest in. It should be noted that the S&P 500 is a popular index for index funds because it tracks a very wide range of large companies and in a variety of industries. But there are plenty of other indexes to choose from that might better suit your investment goals. Factors to consider when making choice. Company size and capitalization. An index may track small, medium or large companies. Foreign. An index might track stocks that trade on foreign or international exchanges. Sector or industry. Some indexes track companies that are in a specific industry, for example, technology or health. Asset type. Some indexes track stocks while others track bonds, commodities or cash. Growing markets. Some indexes track markets that are merging or growing rapidly, which might make for good investment opportunities. 3. Consider investment minimum and costs. As mentioned earlier, index funds are desirable because they're low cost, but that doesn't mean that all index funds cost the same. Some have higher administrative fees than others. Here are some of the costs you should consider. Investment minimum. Index funds require you to invest a minimum amount of dollars. Sometimes the investment minimum can be thousands of dollars or more. Once you've made the investment minimum, you can continue to invest in smaller increments. Account minimum. If you're purchasing a mutual fund from a broker, know that your broker may require you to have a minimum amount of money in your brokerage account. Expense ratio. This is one of the main index funds costs. It's the percentage that you pay from your overall investment that goes towards administrative fees. The average annual expense ratio is 0.09% for stock index funds and 0.07% for bond index funds. Capital gains. You'll have to pay capital gains tax on index fund profits unless you hold the index fund in a 401k or IRA for those of you purchasing from a broker. Typically, you'll have to pay 0.3% on returns. 4. Buy index fund shares. Now you're ready to get started, open an account with the mutual fund company or broker with the index fund you're interested in and begin buying shares. What are the best index funds for new investors? It's difficult to compile a best of list because every investor has a different budget, risk tolerance, and investment goals. If you're new to investing, you might consider opening an account at a brokerage firm that sells index funds. A brokerage firm is a good investment hub, and it may also offer certain invaluable benefits like investment advice, which can help you pick an index fund. If you decide to further your investment career, you'll appreciate the convenience of managing all your investments in one place. Here are a few brokers that offer low-cost index funds with $0 account minimums and low commissions. JP Morgan, Vanguard, E-Trade, Ellevest, First Trade, TD Ameritrade, Merrill Edge, Fidelity, Charles Schwab. For more information about this concept, kindly stay tuned for our next video, and don't forget to follow, like and subscribe to this channel, and also hit the bell button so you can be notified when we release a new video. Thanks. Financial Freedom really cares about your state of finance. Thanks for watching.